So hey everyone, this is Madhumita from Department of Management Studies. So I'm here to explain about the income tax planning in India. So when we say about tax planning, it refers to the financial planning for tax efficiency. So it aims to reduce one's tax liabilities and optimally utilize those tax exemptions. And it also includes making financial and business decisions to minimize the incidence of tax. So next, when we see about the definition, it is an act to levy, administrate, collect, and recover the income tax in India. So this came into force from April 1st, 1962. So when we say about the income tax planning in India, there are a number of tax saving options for all taxpayers. So these deductions are available from Section 80 and it can be claimed by eligible taxpayers. So let's see why should we do tax planning? Because it diminishes the tax liability by saving the SSE the maximum amount of tax by arranging their financial operations according to their tax decisions. So the biggest benefit of tax planning is that the returns can be directed to investments. So this in turn will generate wide flow of money through the economy, aiding the country's economic development. Let's deal about the types of income tax. We have three types, that is the individual income tax, business income tax, the state and local income tax. So when we take an individual income tax, it refers to the personal income tax of an individual. So these taxes are levied on an individual's wages, salaries and other type of income they earn. Next one is the business income tax. So the business also pays income tax on their earnings, their IRS taxes income from corporations, partnerships and small business. So generally the difference between their business income and their operating and capital expense is considered as their taxable business income. So final one is the state and local income tax. So these taxes are levied by the states, the District of Columbia and their outlying areas of the United States or their political subdivisions. So mostly the local governments in several states imposes a local income tax known as the local income tax. So let's see about the advantages of tax planning. First one is to minimize the litigation, that is to resolve the tax disputes with the local, federal, state or foreign tax authorities. Usually there is a friction between the tax collectors and taxpayers. So this advantage is taken into consideration. Next is to reduce the tax liabilities. So every taxpayer wishes to reduce their tax burden and save money for their future. Then to ensure economic stability. So taxpayers' money is devoted to the betterment of the country. So effective tax planning, it provides a healthy flow of white money that results in the sound progress of the country. Finally, we have to leverage productivity. So one of the core tax planning objective is to channelize funds from the taxable sources to different income generating plans. So why do we need a proper tax planning in India? So government data as per the assessment year 2014 to 2050, it reveals only that 1.5% of Indians actually pays the tax. So therefore this proper tax planning is required for both the first timers and the veteran taxpayers so that an appropriate tax amount is paid to the government to promote the economic activity and personal savings. So next is, why does AI in taxation come into existence? So AI is nothing but the artificial intelligence. So that could automate the repetitive process in a taxation system such as processing the documents and filing their account numbers or IDs in spreadsheets. So this helps in efficiently filing the taxes and reducing the overall processing time. So finally, availing these tax benefits under Section 80C and 10D of the Income Tax Act 1961, it proves to be a beneficial one for both